Alright, so we're going to go over some opportunities today. First, in natural gas. We had this level 3.925 and the market fell back and it went up to that area 3.925 and it wasn't ready to go. So sellers came in. How do you know? I've been teaching this for a while on this channel. Market is going up. Demand is going down. So when it's going to this area, this level 3.95, trying to go, but no demand. So what happened? Supply came in right there. You see big red. So lack of demand led to the increase in supply. Supply tested once, not strong, twice, not strong, and this was the reversal. Right here, red bar. Remember, you look for the red bar if you want to go short, green bar if you want to go long. Go down. Alright. So again, demand, as the market's moving up, demand just goes away. Big red, selling, takes over, pull back, it's also weak. Left hand side weakness, right hand side weakness. And that's what happens. Market went to this area right here. Remember, natural gas is bullish, so it's just like catching a top, and then it pulls back to retrace, and retrace right to this level. And as it retraced to this level, buyers came back in and took it higher. So this was just mostly a counter trend trade at resistance, taking back to support. And you have to get out of support. How do you know support? I mean, just look over here. This is support. So it goes and it tests support, right? And then it goes up. Right? The short here is good short for counter trend back to support. Why? Because you see the demand dry up, selling comes in, demand is still weak, price pulls back to support. So the short can be taken here, all the way back to support. And it's actually a much easier trade because here it's not easy. Your stop is going to be all the way back here. So it's not an easy trade because the process of change of the turn is not as clear here, and doesn't give the low risk opportunity. I guess it is clear, but it doesn't give the low risk opportunity. Here you get the low risk opportunity. All right. I'll go over one more. So this is in crude. You had 69.99, 70.05. So it's very clear that they don't want to take it over 70. They don't want to really take price over 70. So retested right here, 70. This level breaking 69.99 and 70.05 by going to 70.09. At this level, you had big red. Right? Now at first I would not be interested in it, but after here, it was evident that the buyers gave up at resistance, fell back, offered the short opportunity, and price just puked all the way below these 69 lows here, right? And now from 69 they're trying to I think maybe this is covering, or there's some buying activity that came here. All right. So what do you take away from both the nat gas trade and the crude trade? It's just that you have a trade location, and from that trade location you're looking for big blue or big red. And this trade location is just resistance. At resistance you have selling, followed by lack of demand, which is your springboard. This is the Wyckoff springboard, not the spring, the springboard. Also known as, I think later on they may have called this LPSY, but Wyckoff called it springboard. And that's your markdown, initiating markdown. Now this trade is a little bit hard in terms of seeing it clearly, because this low, this selling pressure, did not take out this low. This selling pressure is heavy. It's actually more than the rally. No, almost as much as the rally, right? But it did not take out the low. So if you're looking at this, you might get confused and think this is a pullback, but it's not a pullback. This is not a pullback. This is getting ready to break the market. It's disguised as a pullback, right? We'll look at one more. This is gold. Gold goes to 31.24, pulls back to 31.03, tries to break 31.03 by going to 3100. As it goes to 3100, someone steps in. What is this? This big blue. They don't want to take it below 3100. See that? So 3103, price tried to crack 3103. Someone said no way, and they bought it all up with the biggest up wave, biggest volume, up volume in 11 waves, 11 up waves, and 1.9 times average up volume. Goes up, blocks the ability to break down. This rally down takes it out to the upside, has breakout, breaking these levels, this level, and tests here, and then now it's in this position. If the market was still live, it would continue to go. So this is a turn. So we'll see if it gaps, or this, I think it's gonna, we'll see if it gaps. But there are 2 points of resistance here, and there's a lot of space here. So it might just have a hard time breaking through or gap, and then pulls back, because the market is extremely strong. All right, that's all I got. Have a good weekend. Thank you. Bye.